Shibani, hi, afternoon. Want to get you in here. Done with the interim budget, although a late reaction. The markets only picked up momentum on Friday. But just wondering what's going to provide the next set of triggers for the market, because we're already at the fag end of the earnings season now. Yes, sure enough, you've got a lot of, mid and small caps still to go in terms of earnings. It's going to be a status quo MPC policy outcome as well. What next in terms of a cue for the market then?
Hi, good afternoon. So, a few key things. One, of course, as you rightly mentioned, that we are in the midst of the earnings season. And the good part is so far, if you look at the earnings trajectory, at a headline level, the earnings have been largely in line with consensus estimates. So, if you look at the 36 Nifty companies that have reported numbers, there is about a 19% YOY growth in terms of earnings, which means that estimates for FY24 and 25 as a whole has remained largely unchanged, which bodes well from a market perspective. The second factor for the market to now look forward to is post the vote on account is the budget that will be presented once the elections are out of the way. And the vote on account clearly sets the path for the same. A few key things that the market will watch out for is whether there are any kind of push or policy announcements in terms of bringing the mass consumption or the bottom of the pyramid in terms of demand generation up, the way that we have seen in the case of the premium or the upper end segment. And the second most important factor for the market is the private capex cycle. As you know, that a lot of the heavy lifting so far has been done by public capex, both central and state. And now with capacity utilization levels reaching somewhat above average multiples, we would possibly wait to see whether the next leg of the private capex cycle kicks off. If you look at corporate balance sheet, bank balance sheets, all of that is well in place. And our expectation is that that kicking off could also be a trigger that the market would watch out for from here on.
But one particular stock which deserves mention is Geo Financial. It got listed around 240, 239 or thereabout just months back, and look at how it is gaining almost 12% in trade. Large part of the market actually feels it could be a beneficiary of what's happening in Paytm, because Geo Finance Bank has also been launched, and in general there have been block deals where promoters have been raising stake in GeoFin. Nooresh, what do the charts tell you for GeoFin? Do you have adequate data now?
So don't have enough data given that the listing period has been small, but stock has crossed that 265 to 270 mark, which was a resistance for the last few weeks, as well as from the time of listing. That is where it got listed at. So clearly momentum shift here, and now it becomes a case where it becomes a buy on dips going forward. So good price and volume action, very large volumes today indicates a lot of participation. So any fade off coming in the next few sessions would actually be a buying opportunity.
Taken. The other pocket which is doing very well is, of course, the public sector entities. Take a look at Coal India, that's sitting at record high level. And then LIC, of course, which has crossed the market capitalization of 6 lakh crore, the 4-digit mark being hit. But what are the triggers which is actually driving this rally on LIC? We have our colleague Somit joining us to talk to us about just that. Hi, Somit.
In fact, if you see, LIC has clearly outperformed its other peers like HDFC Life, ICICI Pru, SBI Life in the last 3 months. LIC share prices are up nearly 66%, while the share prices of all the other pure play insurance companies are down around 3%, 8%. SBI Life is up around 7%. Now, in the last 3 months, if you see, LIC has added nearly 2.6 lakh crore rupees to its market capitalization, which is more than the combined market capitalization of 12 PSU companies like NBCC, Hindustan Copper, Nalco, Cochin Shipyard, Ircon, and many others. So, what were the factors that have actually worked in favor of LIC in the last 3 months? Now, firstly is the strong embedded value growth that we are seeing because of the strong gains in the overall equity markets, and we all know that LIC is heavily invested in the Indian stock market. Apart from that is the hope of growth revival in FY25, given that FY24 base will be on the lower side. Analysts are expecting growth to be upwards of 10%. Apart from that, the company is also expanding its product portfolio. Recently, they launched the new non-par savings product offering which guaranteed around 10% returns. Apart from that, today also they launched some index plus products. So increasing number of products is one of the reason. Apart from that, analysts are also expecting a likely step up by the company when it comes to the dividend payout policy. Now, analysts are believing that LIC certainly has the ability to pay higher dividends going forward, given the fact that there has been unrealized gains of close to 3 lakh crore rupees because of the gains that we have seen in the equity markets. Now, because of this, the company's available solvency margins have also shot up, which are still not factored invested in, and post that if they sell some equity, they might be able to realize some gains and likely distribute it among shareholders going forward. Apart from that, they're also saying that the hit on the fair value of the company because of the changes in surrender value, proposed changes in surrender value, is expected to be on the limited side for LIC specifically. And also recently government had extended the date of dilution of its stake in LIC till May 2032. So there is no fear of stake dilution coming in from the government side in the near future. And the most important reason was the cheap valuation. Now if you see November 2023, LIC was the cheapest life insurer. It is still the cheapest life insurer because its 12-month forward valuation currently stands at around 17 times. That's the 12-month forward P we are talking about. And while that of HDFC Life, SBI Life and ICICI Pru's anywhere between 62 to 68 times. And do remember, LIC is also the only pure play insurance stock to trade below its embedded value. It's trading around 0.7 times its FY25 embedded value, while the other life insurance companies are trading anywhere between 1.5. Companies' growth rate has been a bit lower than compared to what private players have been reporting off late. And apart from that, the company's operating expenses are also quite sticky in nature and on the bloated side compared to private insurance currently, if you see.
Taken, yes, a lot of triggers, and of course it's visible in the stock price today, though it's of course cooled off from the highs of the day. Talking about cooling off, that's visible across the market. So Nifty itself is now inching towards 21,800. There's a sharp dip when it comes to the banking names. So the bank index is now down 172 points, but the biggest cut is coming in the public sector entities, and a sharp reversal in names like NHPC, Bank of Maharashtra, GIC, New India Assurance. They have taken quite a bit of knock. And even other names like Punjab Sind Bank, etc. will come up for you on the screen. SJVN has also taken a very sharp knock. So a big reversal at play as far as some of these public sector entities are concerned. You can add to that list names like IOB and NLC India, Central Bank, UCO Bank as well. But they're all tumbling away in the trading session. Nooresh, if you can hear me right, is it just profit booking in some of these public sector banking names? And what would you recommend the viewers right now?
So we've seen a massive run across PSU banking space as well as a lot of PSUs. A lot of these stocks are up 20-25% over the last 1 week. So looks like a profit booking case, and one should expect some bit of a consolidation after that. One need not be in a hurry to accumulate. You may get into a range bound move on a lot of these banks. So for example, a PNB which has gone up from 9,500 to 125, 128 could get into a new range of 115, 128. So it could spend some time here. So the viewers wait it out, a sell on rise, but not at nothing else to be done here.
On that note, let's take a very quick break. Yes, some of these stocks are cooling, but the bigger pressure points today have clearly been Bajaj Finance. That's now down almost 3%. There's been UPL, of course, which has been gapped down from the word go and still sitting on over that 10% kind of cut on the futures. Maruti as well has lost quite a fair bit, almost a 2% cut coming in there. There's SBI Life, HDFC Life, Kotak, L&T. The large caps are the ones which are weighing heavy on the markets. We'll take a break, continue tracking markets on the other side.
All right, so the point is that in the last 10 minutes or so, almost everything which is high flying in the market has actually given up, along with Nifty and Bank Nifty, which are already pretty flat. PSE index in particular is giving way. Shibani, which parts of the PSU basket are you not comfortable touching at current levels? We all know the story that there are efficiencies being extracted there. There's a lot of focus coming back, renewed focus of management to cut costs, improve profitability. All of that is fine, but many have run up. Where are the areas where you find things uncomfortable to buy now?
Absolutely. So when we have been evaluating the PSU pack, we are looking at it on a stock by stock or a business by business basis. As you rightly pointed out, the entire segment by itself has run up on the basis of one, the expectation of policy continuity, focus on efficiencies, and valuations which were extremely cheap. But now we've seen that in many pockets, valuations have caught up and possibly have caught up with fundamentals. And therefore, at this point in time, the way we are evaluating the PSU pack is pretty much business to business, seeing whether at this current juncture, the business as well as profitability affords any further room for valuation re-rating from this point in time. If there are PSUs where the PSU run-up has been ahead of fundamentals or has been because of low floating stock, we are avoiding that pack considerably in our portfolios. The second, if you look at the overall space, there are still a few pockets of opportunities which we are evaluating where valuations are still fairly favorable and where we see runway for improvement in profitability. Within the oil and gas segment, there are few such names that we have been evaluating and which we are still positive on. There are some of the larger public sector banking entities where there is expectation of ROA improvement and hence valuation are still fairly favorable. And the third pack where we continue to be positive within the PSU space is the power utilities pack, where we see runway for growth being significantly high because of the visibility on the capex part. But overall, wherever valuations are uncomfortable or where the run up has been largely because of factors which are more technical in nature, not supported by fundamentals, we are clearly, being careful and cautious in that space.
Right. Just looking at, what else has been getting quite weak. And can I just want your take on the charts of Bajaj Finance in particular? Because post the numbers, minute bit of pullbacks, yes, but you haven't seen any material move. In fact, now we're struggling sub 6,700.
In fact, the major reason for that weakness is because the stock was underlying or falling below the long-term moving average prior to the results. So I think when the stock had broken past below the 7,250, 300 mark, that was the point when the stock had broken below the 200 DMA. And now I think it's almost 700 to 600 points below the long-term moving averages. So, we've typically seen that when stocks break below the long-term moving averages, there is a prolonged period of downside which happens into the stock prices. And they take a lot of time for, these stocks, they take a lot of time for themselves to recover and get back into an upward trending mood. The concern for Bajaj Finance is not just on the indicator front, but also on the volumes. And the moment the stock had broken below the 200 moving average, that is almost 2 weeks back, the average volumes for the stock had increased up higher by a margin of, I think, 1 to 1.5 times the average prior to that. So that also indicates that it's not just a minor selling which is happening to the stock price or an inertia downtrend where the stock falls below the long-term moving averages and continues to do it. It's because of some unwinding pressure which is also impacting the stock price trends. So I would believe that the stock would probably tend to underperform. Maybe the sell-off or the intensity of sell-off could get arrested. But I think from now to the next, say, couple of weeks or over the next 1 or 2 months, I would expect the stock to correct by at least another 300 to 500 points.
Okay, there's more downside on Bajaj rather than upside. But the other space I want to discuss with you, Shibani, is hospitality. We were just discussing it with the management of Samhi Hotels as well, how there's a bit of a demand-supply mismatch, how they are looking at expanding their presence as well as profitability by a huge margin. And there is this latest IPO, Park Hotels IPO, which has got fully subscribed within just a few hours of actually opening up. Even the numbers from Indian hotels, etc., were ahead of the already high expectations. Do you still see value or investing opportunity in any of the hospitality names, or do you think they have run up now and it's just best to probably book some profits and churn your portfolio a bit?
Yeah, so the entire thesis where the hospitality segment is concerned in terms of the demand that has been very, very strong, resulting in improvement in ARRs and therefore profitability. That thesis remains fairly intact. As you were alluding to the fact that in terms of demand and supply, the trends are fairly favorable, which can help support pricing as well and therefore add to profitability. However, we believe that at this point in time, one has to be selective in terms of choosing the kind of stocks that you want to own in the sector. The sector has seen a sharp run up over the last year and a half, and therefore valuations are somewhat elevated. And therefore, one has to keep valuations in mind when evaluating the sector fresh at this point in time, even though the runway for both profitability trends as well as demand remains fairly intact.
Great to have you on the show. We'll let you go on that note. Let's get in some trading ideas as well from both Kunal as well as Nooresh. Nooresh?
So that would be a buy on Tata Steel, which hit a new 52-week high. Gave a breakout, has pulled back a bit right now. So expecting this to see some follow-up action, a good risk reward, would keep a stop loss at 138 and go long on this one.
Kunal, what about your list?
So I'll go with the odd name over here. Metropolis is a stock which is confirming a breakout above the 50-day moving average. Looks attractive and could probably come back to the previous highs of 1700, 1725.
Okay, on that note, we are slipping into a very short break. Don't go anywhere. We'll be right back.